Heidi ho, everyone. Welcome aboard. It's another Sunday. Therefore it's another weekly market update from the team ATW, and we will be going to the big island of Australia very, very shortly to talk to Ainslie, who I can see in the background there. Hi, A. We'll be chatting to Ainslie very shortly about that precious metal gold, which has been under a bit of pressure. But maybe in a bounce position, one would anticipate. Not so much for oil, although it is at the support level. We'll talk about that later as well. We'll also be, it's kind of crazy. And this financial market stuff never ceases to amaze me. We are now, 2 years and goodness knows how many months into 6 months, 2.5 years into COVID, for goodness sake. And as I walk around the streets at the moment, doesn't seem like anybody cares anymore. Yet, wow, what an amazing effect it's had on the global economy. Goodness gracious, you can't believe it. Although, pandemics are going to do that sort of thing, I guess. The global economy, of course, is contracting substantially. You can throw a war or two in there. Big one, of course, going on in Ukraine. The global economy as post-COVID, I can't say post-COVID, we're still there, right? But the result of COVID has given us inflation, it's given us interest rates, and they appear to be the main topics of conversation around, well, if you go to a pub anywhere, that's what they're talking about, because the price of beer's gone up, right? As it does, and the price of just everything that gets the beer to the pub's gone up. It's quite an amazing set of circumstances that we have at the moment, and central bankers all around the world trying to work out how to solve that. I don't suppose, of course, that Ainslie and I are about to solve that problem right now, but we can certainly talk about what it's doing to that precious metal gold, Ainslie, which has been under a whole lot of pressure, trending strongly to the downside. But as I say, it looks like it might be in a bounce point at the moment.
Yeah, well, it's a very interesting thing. So what I'm going to do is just grab the screen, if I could there, please. Share.
Sure
yeah,
can.
Good. I'm good to go. Oh, here we go. Like I said, you have two screens, and as soon as you start pulling things up, they disappear. Are we having a look at gold analysis, 4th of September?
We are.
Good. Excellent. Good start. Like I said, things, as soon as you hit that shared screen, you're just like, now which screen? But anyway, so as I do with my reviews, do with my analysis, we're going to start with a quick review. We saw gold continue its downward move from its high of 1807 on the 10th of August. So I'm going to just take it and just going to encompass not just the last week, but the price action that we've been looking at for since I spoke on the 7th of August, I think it was. Now, obviously, NFPs, we always look for NFPs to see what else is going to happen. And the Friday's price action was better than expected. I think the forecast was for 295, and I think we came in with numbers around the 315,000 mark, and we saw gold bounce as a result of that. It had bounced from a low of 1688. So the previous low in July, I think it was about the 10th of July, was 1680. But if we go back almost 12 months ago, it was 1689. So this area, what's interesting about this area, guys, is just keep an eye on that 1688, because it's obviously a very strong buying point. When we go to the charts, you're going to see it a little more closely. We did have that bounce, and we did close at 1712. So we're back up over that 1700 mark. On the higher time frames, the technical setups that we talked about at the beginning of August, that we were filling us with a bit of enthusiasm and a bit of a kick in the step, failed. But that's all right. We were looking for confirmation. We didn't get the confirmation. And with all the other fundamental analysis, all the other bits and pieces going on with the aforementioned inflation and the strengthening US dollar, we did see gold take a hit. So quickly, let's have a look at how this all set up. As I referred to, there was a high test bar very early on this is a 4-hourly chart, high test bar, and then we just saw this decline. It just kept going down. to be quite honest, on a pivot bounce, it was a good setup. You know, you've got your 20, your 50 EMA and your 100 EMA in line, a rejection of the pivot, and then a continuation all the way down to S1 and S2. I don't have S3 on my chart, so, you know, it could have gone there. But there we go. You can see that low was 1688, and it started to climb up. And that was possibly because they thought things were being a little more hawkish with what was going on in the Fed commentary. And then we've got the non-farm payrolls having a better than expected number. Now, as I said, let's just have a look at, are we just trading in a range? We're talking about downturns, we're talking about this kind of stuff, but if you take a step back out, and if you're down on an hourly chart, for goodness sake, I do hope you are looking at daily charts at least, to give you a sense of direction, because you can see here, okay, we finished the week on a technical bullish engulfing, bouncing off a level. Am I ready to jump in and take a long on that? Absolutely not. But let's just keep an eye on what's going on here. We can, if we drew a line across the top of those highs from the middle of August, you've pretty much got a bit of a technical downtrend with 3 bars up, or 3 advancing soldiers in a downtrend, and bang, straight back down again to a level of support, known level of support. So bullish engulfing candle. What comes next week? Not sure. Let's have a look at the weekly chart. Again, weekly chart, you just look at that, go, oh, we're just puddling around. We're just puddling around in this range. It's a strong range, by the way. So backwards and forwards over this 1700 to 1800. We don't get much over 1800. I think that high was 1808 back at the beginning of, I think it was the 10th or the 11th of August. But one of the things we've got here, and I'm just keeping an eye on this, and this is weekly and it's quite strong, is the MACD histogram is receding back up to the center line. We've got price action at equal levels, and we've got the MACD histogram forming a divergence. Keep an eye on it. Like I said, we're not ready to jump into anything yet. This is the low test bar that we were talking about a month ago. And I was waiting for confirmation with a close above that hammer, which 1, 2, 3 bars back. I was looking for perhaps a shoot off, because August seasonally is quite bullish. We didn't get it. It failed. We didn't get the confirmation either. So that also is something that tells you shouldn't have been trading it. MACD still below the signal line, and an advancing DI minus, and the ADX above the 25 line at 25 marker point. So that should all tell you that it was keen to keep going. We were hopeful. It didn't work. So them's are the charts at the moment, but we are still trading within a range. Okay. So the fundamentals for the week are the pretty much we were very hopeful. There was a rally, but that gold had its initial shine right off its face, and it's landed back almost where it started a month ago. Again, that important level of around that 1688, 1689, 1680. If you go back and check from it, I think it's July last year, you will see that level everything bounces from those levels. So we'll just keep an eye on that. If it breaks below that, I think we're going to see a fall, maybe about down to 1650, 1640. I think it was 1647 below that mark. But we closed back over the 1712. This is why I'm saying proceed with caution. I don't have a perfect setup here. August is seasonally bullish period, but that only held true for the first half of the month. Remember, seasonality is only a bias. It is not an entry signal. The rest of the story has been that strengthening US dollar, which if you have a look at the US dollar from the 11th of August, it turned around and it hasn't come back really. So gold is really part of the gold decline. It's the strength of the US dollar. And we only saw that bounce, as you could see on the 4-hourly chart, was only a result of those better than expected NFP figures. So they're only 315,000. It wasn't exactly what you would say fantastic. It wasn't like it was the previous month, which was around the 520,000 mark. So they're the fundamentals. Where to for the outlook week beginning 5th of September? As I said, we're still in that consolidation range. And you can see that on the weekly chart and the daily and the weekly, not so much on the monthly, but that we do still have the month of August trading within that range of the hammer that was created in July. So let's just see where this goes to. Seasonally, gold is coming to an end of the period of the bullishness, and we're looking at a retracement, downturn / pause. It's a bias before the much noted rally. We know at the end of November 27 is a day I have marked in my calendar because that is normally the beginning of the gold rally coming into the Christmas. That starts that whole seasonality of bullishness from gold at the end of November, beginning of December. We need more information at the moment to see if the downturn continues, and that at the moment is very sensitive to US dollar strength, what the Fed says next, whatever that might be. Who knows? I don't think they know sometimes, but you just sort of go, what did they say? At the moment, gold is staying within that range. Okay, so on a technical basis, gold is still ranging. 1680, if we do have a crack below that coming into the next couple of weeks, have a look further to the downside, and that's just the way it has to go, I'm afraid, Jeff. Yeah, other than that, have we got a bounce on that bullish engulfing counter from Friday? Don't know. Let's see.
Yeah, look, I think that's a pretty key level right now. What is it? 1712.
So we've closed back up over the 17 mark. The key level is that 1688. So 1680, 1680.
That's the one.
89. As soon as it gets down there, it bounces back up again. And for every time it's hit there, and we're going back, we're not just talking about in July this year, we're going back July last year as well. That was 1689. So it gets down there and it just goes ping.
Yeah,
so it bounces back up, ping, or rallies, as we could technically say. It rallies. In Ainslie speak, that's ping. But we've got a bullish engulfing and we've got to close above the 1700 mark, which is pretty important as well. So don't jump in on Monday morning. Just, I suggest, I'll be waiting for confirmation.
Yeah, what's most interesting, and I've only just noticed it now when I look at the gold chart. The most interesting part of that number, which is 1680, whatever it is, or 1690, thereabouts, is gold broke above that level as COVID hit, right? And it's been above that level since COVID. And every time, as you say, it hits that level, it bounces.
Yes.
I wonder, my first comment of the day was, we seem to be a little bit laconic about COVID anymore. I wonder, does that mean anything?
Don't know.
Interesting.
I don't
The
know.
week ahead will be very interesting. And as you say, the dollar has now poked through a very strong resistance level.
Yeah.
And
so it's taken off on the 10th of August. It really hasn't looked back.
So that's interesting.
Yeah.
And that will put pressure on gold and everything else, of course. And that's why we're seeing global indices segue